Good afternoon and welcome to the Coinbase Institutional Markets Call. It is midday Eastern Time here in New York on Tuesday, the 30th of April. We have another fantastic call lined up for you today. We're going to be going through four main things: the recent Hong Kong ETF launch, the Eigenlayer Airdrop, unlocks. Now, this has already been a big year of unlocks. May is going to be a very big month, and we're going to run through what to look out for and where you may potentially see some weakness. And then lastly, macro. We've got a busy macro week ahead. Rates are still so important to our asset class. So understanding what's going on in the macro is imperative. Now, David, I want to bring you in here. We spoke about runes last week. We spoke about BTC miner fees. Obviously, we're just off the back of the halving. I was reading some articles this week about what's going on in runes. Can you give us a bit of a rundown of the developments in the last week or so?
Yeah, certainly. The runes market has definitely quieted down a lot. Transaction fees in the few days after the halving, so days 2 through 4 and 5, were about 30 to 40% of total miner revenues. That's since come back down to roughly 10%. And so we're starting to see the hash price, which is how much money miners are making per unit of hash rate that they contribute to the network. They're at all-time or in the lows of more than a year. Even at the same time, though, hash rate is still growing. Miners still appear to be operating above their break-even levels. Transaction fees, this is very different from previous cycles that we saw with ordinals back in May and December of 2023, which lasted for several weeks, even a month or two during the latter cycle. Runes appear to have tapered off quite quickly in less than a week.
Thanks, David. It's really interesting what you said there about the value per hash being at low levels. Can you give us some context as to kind of like what that means for miners and how that can potentially change?
Certainly. So the way we can compute what we call the hash price, which is how much profitability you get per unit of hash rate you have, I guess there's two main factors. The first one is the price of Bitcoin, right? That's how much revenue you get. The second one is how many other miners are in the network, so the total network hash rate. So there's two ways when the hash price can go up. Number one is if the whole network, sees overall less miner hash rate, which means it's less competitive, which means that you earn more money per hash rate you contribute. The other one is an increase in the price of Bitcoin or overall transaction fees, which translates to more miner revenue. So today we're at lows and not seen since the tail end of 2022. I believe the end of the last cycle we saw similar hash prices, but still I think miners are still able to be profitable. It's just eating into some of the profit margins that we see today.
Okay. Well, let's just hope the price goes up and it makes their lives easier. Fingers crossed. Perfect. We'll touch more on that in a second. So quick housekeeping before we get into the main show. If you are watching on YouTube, don't forget to scan the QR code to access David and David's fantastic research. If you're on podcast, then all of the links will be in the show notes. Without further ado, let's get into it. So David, we had the Hong Kong ETFs launching yesterday. Now, I would say there was probably some tempered expectations around how successful they would be, especially versus the US ETFs. But can you take us through how that launch went?
Yeah, I think the Hong Kong ETFs went a little bit less well received than anticipated. We saw around 13 million total trading volume across all the Bitcoin and Ether ETFs, with about 1/4 of that volume coming from the ETH side. Compared this to around $4.6 billion in volume on day one in the US, which is almost like a 400 times difference. They're very, very different orders of magnitude. I don't think this is as big of a letdown as some of the market might be making out to be in the short term, as we've seen with some of the recent price action. We always anticipated that most of the investors in Hong Kong already had access to US ETFs, but this was always more of a kind of setting the groundwork for possible eventual expansion into China via the Southbound Connect, maybe in the course of months or years if regulators do approve that. So yes, the launch was definitely underwhelming, but it's more of a groundwork setting product than a meaningful source of capital inflows.
Yeah, that makes a ton of sense. Greg, when you were chatting to clients about it ahead of these launches, was that a similar sort of mindset? Folks were not expecting a ton and really it was just a foundation for the future?
Yeah, I think that's exactly right. There's definitely it's great that we have these products. Bitcoin, ETH, they're global assets. So it's a really good thing to have an ETF in the Asian region. But nobody was expecting this to be anything near what the launches were like in the US, partly just because the ETF market isn't as developed as it is here in the US. So, I think it's positive, but it's not going to have an outsized impact on flows, at least in the near term.
Got it. And David, there was some headlines around China Asset Management. Great name. What did they entail, and like what was actually like reading through the headline? What did it actually mean there?
I believe that they said that they were expecting around $100 million of net inflows. I think some of these might have been created, pre-launch, but I think not all the numbers are fully clear yet. It's been around 12 hours since they've launched, and not all the numbers are in yet on Bloomberg. So there's still some uncertainty around how much actual AUM they're holding relative to their volumes on first trading day.
And these ETFs were in-kind ETFs, which is different to the cash version in the US, but the market structure is definitely a little bit different. Can you talk to like how they're constructed? I think there's multiple currencies and other things like that.
Yeah, certainly. So, Hong Kong, they have their official currency, the HKD, but a lot of international exchange volume is in USD, and obviously they're located right next to it in China. So they also, some of the China asset management versions of the ETFs also had a trading pair in CNY, or Chinese yuan. So you have different products, some trading against Hong Kong dollars, some trading against US dollars, some trading against Chinese renminbi, which is why you might see some differing numbers around how much volume there is in these Hong Kong ETF products in these first few days. But I want to take a moment actually and talk about Hong Kong ETFs and kind of what they mean as well in terms of foundational ground setting too, which is that we also see these approvals also instigating some other regions or other governments around the region to also consider spot ETFs. I know some in Korea were thinking about it as well, and some of these other governments were thinking about this. So Hong Kong definitely beat them to the punch, and I think that this is more of a regulatory foundational groundwork product.
Yeah, it makes a ton of sense. Greg, obviously we have ETFs in Canada already. Maybe can you just provide a bit of an overview of like maybe some of the other ETFs in Australia and Canada and what we're hearing around those?
Yeah, so we've had crypto ETFs in Canada for some time, both Bitcoin, ETH, and ETH ETFs with staking. We obviously now have them have Bitcoin spot ETFs in the US here. Launched yesterday in Hong Kong, and Australia seems to be next on the list. So this phenomenon does seem to be making its way around the globe. Which again, is a very positive sign for crypto overall. But I think we need to be careful not to get too excited and think that we're going to have what happened in the US, happen in all of these other regions. Markets in different regions are just different. And ETFs aren't as big as they are in the US anywhere else in the world. Europe, for instance, has ETFs. But they're not nearly as liquid, not as developed of market as we see here in the United States. So I think it's positive. Crypto will get to more people, but I'd again caution it's not going to be this tidal wave of flows like we saw here.
Makes a ton of sense. George, we'd love to bring in here. Can we have a quick update on US ETF flows? They have slowed down a little bit, but so have the outflows. But Bernstein still seem to think, and I would agree, that we still hit 150 by 2025. So it's just a temporary pause. But what's been happening the last week or so with regards to their flows?
Yeah, for sure. So last week we actually had about $328 million of outflows. This week also so far started with about $50 million of outflows. So it slowed down a little bit as of end of day yesterday. So I think overall, big picture, like it's the same trend that we've been seeing over the last month or so, which is mostly sideways with a slight downward bias, perhaps over the last little bit more than 1 month. But there are some positives as well, I think. There were some headlines of Morgan Stanley announcing that it's working on allowing solicitation of Bitcoin ETFs directly. So far, it was mostly reverse solicitation. So I think there will be more wealth managers and banks as well that do that over time. So I think over the longer term, the picture should still be decidedly positive.
Great. So yeah, a momentary pause. Nothing goes up and to the right in a straight line. I think we all know that well. Now moving to other news, Eigenlayer announced their airdrop this week. David, can you kind of run us through the high level, and we'll dig a little deeper in a second as well?
Yes, certainly. Well, the Eigenlayer airdrop, the Eigen token that's announced, is actually quite unique in that it's not a pure governance token, right? So the airdrop, the white paper came out. It was almost 50 pages of very core technical content, with very little of it going towards allocations, etc. And what the Eigen token really allows is this thing called it's an intersubjective work token, which is definitely a mouthful. But the idea here is that not everything can be provable for restaking. Not everything is able to be fully proved in an on-chain fault proof. And so you want to have a new token, which is an Eigen token with special forking properties, etc., which it gets quite technical, but it's able to secure new use cases. So it expands universes of services that the Eigenlayer can secure. So for example, this might include stuff like bridging or oracles, where whether or not a bridge is transacted successfully or whether data is provided correctly is not fully able to be proved on chain, and you might not want to slash ETH or put your ETH up for restaking in this. So in the future, some AVSs can be secured both by Eigen token or by ETH or by some mixture of the two. So it's really a new restaking token here.
So are you saying in that scenario there, if you do something you shouldn't be doing, you could potentially choose to have Eigen token slashed instead of your ETH?
It depends on the actively validated service. So Eigenlayer enables different services to be verified on their platform. The different types of services, the way they do their fault proofs, they might want to have Eigen instead of ETH. Users can also choose to allocate. I think it's not fully clear exactly how this will work for each individual AVS, but the Eigen token is essentially a new collateral token for certain types of work that Eigenlayer can do.
So yeah, there's certainly a ton to dig into there, and I know speaking to various people that a lot of people are still digging into it. It's very, very technical. So we'll come back with more on that. Now, there are a few other things that people found interesting around this token release, David. Can you kind of talk through some of the things that we need to know?
Yeah, I think the biggest thing to be aware of with this token airdrop is that even though the airdrop token claims will start on May 10th, these tokens will actually be non-transferable, which means there's not going to be any Uniswap DEX pools. There's not going to be any price discovery, or at least market-led price discovery in the first few months after launch. So we're not sure when these tokens will become transferable. Per their release, they said that it will take a few months to determine token decentralization to further hammer out the full mechanics of how the Eigen slashing and forking mechanics are actually going to work. But it could be an order of months between the first airdrop date and also when they start trading.
Got it. Okay, and we have seen some weakness from other tokens in the space as a result of that. Pendle is down a good amount, sort of 17 to 20%. It's moving around a lot. But can you run through why that is, and maybe is it justified or not?
Yeah, Pendle's definitely taken a short-term hit in terms of price. Just as a background for our listeners, Pendle is a protocol that allows you to split up the principal and the yield-bearing components of any interest-bearing token. This was very popular during a lot of the airdrops with liquid restaking tokens and restaking itself. So it will allow you all the airdrop points and all the airdrop allocations will be allocated towards the yield-bearing parts of these tokens on Pendle. Now, with some of the surprises around Eigenlayer in its airdrop, Pendle as well has taken a hit. Its TVL has dropped from just over 5 billion down to around 4.2 billion today. And there's some concerns around how much additional usage Pendle will continue to get in the face of these surprises.
Yeah, certainly one to keep an eye on as that evolves. Now, David, were there any other surprises around how they plan to do this TGE?
Yeah, I think the other big surprise, in addition to the non-transferability of tokens, was the geolocation and restrictions around claiming the airdrop. So it's not just geo-restricted, it's also VPN blocked, which on the other hand, ETH deposits into the protocol initially were, and also the point collection as well, were enabled for everyone internationally. But then these airdrop claims are very heavily geo-restricted. So there was some surprise there as well with regards to this. As well, one other thing to add on the VC side, all the VCs, they have a 1-year lockup, and then they'll vest linearly over years 2 and 3. There is also some open questions around whether or not this first year lockup will start when the token actually drops on May 10th, or when the tokens become transferable. So there's a little bit of uncertainty around that as well.
Thanks, David. We'll certainly be keeping an eye on the Intersubjective Work Token and any more of those that might proliferate in the future as that evolves. I don't know why you make these things so complicated. I mean, I can't even say it, let alone understand it.
It's a mouthful.
It's crazy. Anyway, moving on, some breaking news. FTX Estate have wrapped up their sale of the second tranche of Solana tokens with bids around $100. That's a decent discount to spot. And if you remember, the previous tranche they sold was around the $64 mark, which was a significant discount. This discount feels smaller, but still will have an impact on the market. Greg, we'd love to bring you in here. How should we be thinking about this? What are some of the trades that clients may be putting on as a result of winning these bids?
Yeah, so this is a very interesting news coming across. What we're hearing is that there were bids in the $85 to $110 range. We're also hearing that everything 95 and above was accepted. So that's about, call it a 26% discount to current prices, which is tighter than the last tranche. This is important from a market and flow standpoint because a lot of these investors were likely either selling liquid Solana that they had in their portfolio to make room for these discounted tokens, or otherwise putting on hedges. And that could have been the reason why we've seen Solana underperform, even as the entire market's traded lower over the past weeks. But Solana's really been an underperformer. And I think investors making room for this block had something to do with that. Now that this is done and dusted, we could see Solana trade a little firmer now going forward, at least until the next tranche is announced.
Yeah, that makes a lot of sense. I mean, if you're sitting on a load of SOL and you're expecting another huge amount, then yeah, it makes sense to trim some of that. Now, Greg, this isn't an unlock obviously with Solana, but we have got some big unlocks coming this month. Can you run us through some of the ones we should be keeping an eye on? Because again, we might see some weakness in those assets.
Yeah. 2024 is really becoming the year of not only the ETF but the unlock. In May, we have a number of rather large unlocks. Pith has over $1 billion unlocking. AVAX over 300 million. Arbitrum and Aptos have 100 million each. Starkware 80 million. So a lot of tokens coming potentially for sale. We don't know what investors are going to do with these, but what we've seen so far this year is when you have large unlocks, these tokens tend to trade weak, even if the story is a good one and even if investors are constructive. It's just there's just too much supply in the short to medium term. So this is definitely something that people want to keep an eye on.
Yeah, I mean, it feels fair, doesn't it? If you made an early investment and then you do get an unlock, it feels right to probably take some off the table. Hopefully they're there for the longer term and they're just trimming or risk managing.
Yeah, exactly. I mean, a lot of the investors that are getting these tokens, I think we've talked about it before, their cost basis is in the pennies, sometimes fractions of a penny. So they really become, price agnostic up here and look to take advantage of any liquidity they can get. Now, what does that mean for people that like these projects? It means that, hey, if you're constructive and you have a medium to long-term view, this could be an opportunity. So if any of your favorite projects are on that list, you may want to get ready.
Yeah, I like that. Stripe are back into crypto payments. And I guess kind of like an on-ramp, I guess. David, would love to kind of bring you in just to kind of run through this news. And then Greg, certainly stay as well.
Yeah, I think this is huge. Stripe, for those who don't know, powers most of the online transactions we see today. They're kind of a connectivity point between a lot of the shopping services that you see and the payment providers. They processed around $1 trillion of payments last year. And so Stripe recently announced in one of their demo days last week, which was that they're integrating Ethereum, Polygon, Solana, and I believe Avalanche as well now into their payment system so that users can actually go ahead and take their native crypto wallets and pay with USDC to purchase things online instead of using a credit card or any other reward system. So this is huge. And I think this is kind of where we're starting to see more and more crypto-enabled use cases integrating more seamlessly into, outside of crypto products.
Yeah, I guess we'll let them off for dropping crypto payments in the past, given they're bringing them back. But no, definitely good to see. And staying on the payments thread, so we've we announced many months ago, 6 or 7 months ago now, that we were going to integrate Lightning Network. We have now integrated that. So if you're using that on Coinbase, you'll soon be, and you're sending Bitcoin, you'll soon be using the Lightning Network. So David, can you just give us a quick overview of what the Lightning Network is and why it's important?
Yes, certainly. The Lightning Network is a Bitcoin layer 2, probably one of the oldest means of scaling Bitcoin. It allows you to send Bitcoin via payment channels between different parties at a fraction of the cost of an L1 network. So it sells much faster, it's much cheaper, and it pretty much allows scalability within Bitcoin payments. So instead of paying $20 to move, $10, you'll pay 20 cents to move the same amount of money. So I think enabling the Lightning Network allows just a lot more onboarding and offboarding from Coinbase in a much more economically feasible fashion.
And I think Coinbase is charging 0.1%, I think, on sends, which certainly is, to your point, it makes it cost effective to send at all times. I think there are some limits just as it ramps up, but that's understandable given the infrastructure and given it's a new launch. Now, we're going to move on to macro in a second, but George, we'd love to bring you in here just to run through CME basis. We obviously had the CME expiry last Friday. Can you give us a quick run on what space is looking like across BTC and ETH and open interest as well?
Yeah, for sure. So it's definitely, CME basis on BTC, one of the key things I think in the current environment to keep an eye on. It's been tightening a lot recently. Over the last couple of days, we've been trading around 5-6%. I think the lows were around 4% yesterday evening. And at the same time, CME Bitcoin open interest has actually gone down from 12 billion to around 8 billion plus minus. And that period, actually, also we discussed ETF flows earlier in the call. That coincides with this drop in CME Bitcoin open interest. And the expectation has certainly been, I think, that with basis compressing, you might see some unwinds of these basis trades where potentially some of the spot ETFs may have been used as collateral. So I think that's a key thing to still keep an eye on. On the perp side as well, just to cover that, funding rates mostly still in positive territory, but only marginally so. So in Bitcoin, we're looking at 6 to 7% annualized at the moment, ETH around 2 to 3%. So it does kind of reflect the overall market sentiment at the moment, I think, which is obviously somewhat subdued given we're trading at support levels here, just around 61K in BTC and $3,000 in ETH.
Yeah, cool. That's great, George. And in terms of flows perspective, given there was expiry, were there many people taking basis off, et cetera, or rolling it?
Yeah, so we have seen some flows with folks taking or trimming their positions, but I don't think it's been as much as some people in the market have expected. If you look at some of the latest COT reports, I think you still have around $6.5 billion of shorts reported by hedge funds in Bitcoin specifically on the CME futures. So that's been something that's I think been puzzling people over the last few days as it's been compressing. But again, I think let's look at it over the next 2 weeks or so and see how basis behaves. If it stays down here, maybe there's going to be more unwinds.
Great, perfect. Thank you, George. Greg, we'd love you to come back. We've got a busy-ish macro week this week. So what are some of the things we should be keeping an eye out for?
Yeah, we have the Fed tomorrow, so it'll be really interesting to see, what Powell says as far as his expectation for rate cuts later this year. And then on Friday, we have non-farm payrolls, which is always a big one. So again, crypto is at times a macro asset, and at times, we trade on our own. So, barring any big surprise either tomorrow or Friday, I would expect the reaction in our market to be rather muted. Now, if Powell comes out and says, "Hey, I'm very comfortable with rates the way they are," and we may not get a cut this year, that's going to affect every market, ours as well. So again, something to certainly keep an eye on.
Perfect. David, George, how are you guys thinking about the macro and its influence on crypto at the moment? Maybe, George, let's start with you.
Yeah, sure thing. I think the Fed certainly, as Greg said, key event. I think a lot of the focus will be on the language in the press conference and the outlook for the rest of the year, as Greg said. I think the other thing that will be interesting is also the comments just with regards to the balance sheet runoff. Because now, actually, if you look at the Fed balance sheet in relative terms, if you compare the current balance sheet runoff to 2018, 2019, at that time, they managed to reduce the balance sheet by around 16%. And actually, we are at that very same mark at this point as well. So that's going to be interesting. And obviously, in the context of, as Greg mentioned, the stagflationary pressures last week with relatively weak GDP numbers running at 1.6% annualized for Q1 and 3.4% annualized inflation. So that's definitely going to be quite interesting.
And David, we'd love your perspective, and also maybe touching upon kind of like some of the stuff that's been happening with dollar yen this week, or was just some big moves there?
Yeah, certainly. I think, well, going to the Fed and the rate cuts, I think one thing that's really interesting to watch is just the expectations of how how and when they're going to do rate cuts. The Fed fund futures are still pricing the first rate cut in November, while the rest of the world in Europe, they're planning on cuts in June. The S&P has already cut last month. So there's big questions around that. And also the Fed has been able to focus a lot on inflation because the economy has been quite strong. Employment has been strong as well. So in light of this week of GDP growth, the non-farm payroll numbers in the end of this week on Friday are also going to be quite keen to watch. Speaking about Japanese yen and the USD, I know it's been in pretty big headlines that the third largest currency in the world, the Japanese yen, has been breached the 160 Japanese yen to dollar mark. It's since retraced a little bit, possibly due to some intervention, but these markets can be quite complex. I think that the bigger picture here and how it relates to crypto is that currencies are very subject to different government machinations. There's a lot of intransparencies to how these exchange rates work. If you're in certain regions where the currency is depreciating, your purchasing power abroad might be impacted. Your cost of imports is also going to be influenced, especially if you're someone who likes to travel abroad internationally. So I think that this kind of speaks to crypto's role globally outside of the US dollar. We like to price everything in Bitcoin in US dollar, ETH in US dollar, but there's a whole world out there that's looking at cryptocurrency as a hedge against different types of government or currency deflations or debasement.
Yeah, that makes a ton of sense. I think what I also just heard you say was I should be booking a holiday in Japan. Also totally okay with. Awesome. That is a wrap for this week. Thank you guys. Really appreciate it. Great insights as always. And thank you everyone for listening in. We will see you next week. Take care.